Welcome. In this video, can Zbcn go up 220% from here? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand.
The breakout of a specific horizontal or sloped area that previously acted as a strong resistance level within price movements is considered a highly positive technical development for investors. These types of resistance zones are known as levels where price previously halted its upward movement and encountered selling pressure in the market. Resistance levels are typically formed in technical analysis from areas where the price approached multiple times in the past and faced selling reactions. Therefore, these areas are closely monitored by investors, and once broken, it signals that a new psychological threshold has been crossed in the market. In this context, as you mentioned, the fact that the price is broken through a previously significant resistance level holds great importance from a technical analysis perspective. This breakout usually triggers a bullish momentum in the market. A breakout to the upside indicates that buyers have taken control in the supply-demand balance and sellers are losing strength. This also signals that market participants have a more positive outlook for the future. Especially after such a resistance breakout, when the price returns to this level for a retest, this is considered a healthy and natural behavior in technical analysis. This retest process is crucial in testing whether the area that previously acted as resistance can now function as support. If the retest is successful, meaning the price holds at this level and starts to move upward again, this technically confirms that support has been validated and is often a sign of a strong rally. These kinds of retest movements are typically used by large investors or institutional traders as strategic entry points to increase their positions. Because investors who missed the initial breakout often see the return to this level as a buying opportunity. This creates significant buying pressure in the mentioned area. If the price reacts upward again from this support zone, market confidence increases and positive momentum strengthens. From an investment psychology standpoint, this process is also very important. After a resistance level is broken and begins to act as support, it means that many investors who were previously sellers at this level are now becoming buyers. This shift is another indicator that the market is changing direction and entering an uptrend. At this stage, investor confidence increases and typically trading volume also rises. The continuation of upward price movement following a retest forms a solid technical structure on the chart. The structure is often referred to in technical analysis as the breakout plus retest strategy and frequently produces successful results. According to this strategy, when the price breaks a strong resistance level and then retests it and holds above it, the likelihood of the upward trend continuing increases significantly. Technical analysts often choose to open positions in such scenarios because the price has now created a new support zone. In short, the breakout of a resistance level followed by a healthy retest is a very strong and positive signal in technical analysis, indicating the continuation of a bullish move. These structures often show that the market trend has changed or that the current trend has gained strength. Especially when the resistance level has been tested multiple times over a long period, the impact of the breakout and subsequent retest becomes even more powerful. Therefore, such technical developments are closely followed by investors and play a major role in their decision-making processes. When the price continues its upward movement after bouncing from this support zone, it also eases market sentiment psychologically. For many investors, this breakout retest rally structure builds trust in the market. Technically, with the confirmation of this pattern, higher target levels are more likely to be tested. At this stage, new formations, new support resistance structures, and momentum indicators begin to be monitored to confirm the trend's continuation. Especially after such breakouts, it is often observed that the price continues to move within a trend for a while. This becomes a highly valuable strategic point for medium and long-term investors. This scenario not only offers short-term profit potential for the investor, but also indicates that the price continues to remain within a solid technical structure across broader timeframes. This gives the investor important advantages in holding positions, increasing exposure, or developing new strategies. In conclusion, resistance breakouts followed by a healthy retest movements are among the strongest and most positive structures in technical analysis to support the continuation of an uptrend. On charts where these patterns occur, an upward trend usually continues steadily. This represents a major opportunity for the investor. But we can't rely solely on resistance for analysis. Let's also take a look at other metrics. Stay tuned.
I'm interrupting the video for a moment, friends, because BitTunex Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you will receive a $100 bonus, and if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description.
RSI, or the Relative Strength Index, is a widely used indicator in technical analysis to measure the strength and momentum of price movements. This indicator moves between 0 and 100, and levels below 30 are generally considered oversold, while levels above 70 are considered overbought. However, interpreting RSI not only within these threshold values, but also through trend structures that form within the indicator itself, can yield highly effective results. Especially, trend lines formed on the RSI can act as support and resistance, much like in price charts. This is exactly where the rising RSI trendline comes into play. At present, there is a notable rising trendline forming on the RSI indicator. This line serves as a strong support level, with the RSI previously touching it multiple times and bouncing upward in response. Each time RSI has approached this rising trendline, it has responded with strong buying pressure and resumed its upward movement. This clearly indicates that the trendline has been recognized and respected by market participants from a technical standpoint. A rising RSI trendline is generally regarded as a sign of strengthening buying momentum in the market. This usually reflects a bullish bias in the price chart as well. Each dip in the RSI occurs at a higher level than the previous one, which technically signals a strengthening upward momentum both in the indicator and in price action. If RSI touches this trendline once more, that contact will most likely trigger another wave of buying pressure. Such a structure also has significant psychological effects on investors. A trendline on the RSI that has worked multiple times and proven its reliability is viewed by traders as a strong support level. Therefore, when RSI approaches this line, many investors anticipate a bounce from that point and tend to open positions accordingly. This creates a kind of buying habit at that RSI level, increasing trading volume and contributing to another upward bounce in the RSI. Moreover, the fact that this rising RSI trendline is working in harmony with the price chart further strengthens the validity of the analysis. If higher lows are also forming on the price chart, then this rising RSI trendline on the RSI confirms that there is a clear upward momentum in the market. This supports the potential for prices to reach new heights in the future. When RSI touches this trendline and reacts upward again, it can also be interpreted as a bullish continuation pattern in technical analysis. This means the indicator has reached a strong buying zone again, and investors have found it appropriate to re-enter positions at this point. RSI moving close to the trendline may also indicate that large capital investors are closely watching these levels and taking strategic positions from these areas. A rising RSI trendline signals to investors that the trend is still intact and that there is still strong buying momentum in the market. Therefore, RSI approaching this line is often seen as a new buying opportunity. From a technical analysis perspective, a positive divergence that forms along this trendline could lead to further upward potential in price action. Especially in the cryptocurrency market, RSI trendlines tend to work very precisely. Investors use these indicators not just as support and resistance levels, but also to determine the direction and magnitude of momentum. RSI approaching a rising trendline could indicate that a temporary correction is coming to an end and that a new upward movement is about to begin. This is especially valuable for short and medium-term traders. Typically, price movement mirrors these RSI trendline interactions. In the hours or days following a bounce in the RSI, bullish candles often begin to appear on the price chart. This upward movement not only confirms the reaction in the RSI, but also signals the start of a new wave of buying on the price chart. Therefore, a bounce from the RSI trendline can be seen as a strong and reliable technical confirmation for price movement. Also, the decreasing distance between RSI and this trendline may indicate that any market consolidation or pullback is nearing its end. If RSI approaches the support line, the likelihood of previously observed scenarios repeating is high. This could lead to another upward bounce in RSI and renewed momentum in prices. In summary, this rising trendline formed on the RSI indicator is a very strong technical structure. The fact that it has worked multiple times in the past and RSI has bounced upward from these levels provides investors with a significant clue.
If RSI approaches this line again, it may be interpreted as a new buy signal. It suggests that overall market momentum is continuing, buyers are still strong, and prices may once again begin an upward move in the near future. In conclusion, the rising trendline on the RSI offers investors both technical assurance and psychological support. This type of structure is a strong technical argument not only for short-term but also for medium and long-term trend continuation. If RSI approaches this line again, the likelihood of a bounce is quite high, which could lead to upward momentum in prices. Success in technical analysis is possible through identifying and strategically evaluating such detailed structures. This RSI trendline may present a unique opportunity in exactly that sense. When RSI rises, price rises too.
The Elliott wave theory is a time-tested and highly powerful technical analysis tool that demonstrates how market cycles are shaped by investor psychology and behavior. According to this theory, market price movements develop in specific patterns, beginning with a 5-wave primary structure, 3 impulse waves, 1, 3, 5, and 2 corrective waves, 2 and 4. In this context, observing that we may currently be at the beginning of the 3rd wave in the existing market structure could signal an exciting potential. Especially when analyzed within the framework of Fibonacci extension levels, the 3rd wave can extend to at least the 1.618 level and ideally to the 2.272 level. If these levels are reached, the price could potentially increase by approximately 220%, representing a significant profit opportunity for investors. The 3rd wave is the most powerful and aggressive impulse wave in the Elliott wave structure. It typically coincides with periods of increasingly positive news flow, growing investor confidence, and clearly rise in volume. During this phase, both retail and institutional investors tend to increase their positions, which causes the price to move upward with strong momentum. Technical indicators during this period often show positive divergence, supporting the strengthening upward momentum. Many of these signs are also present in the current analysis. While the price structure signals a transition to the 3rd wave, rising volume and positive momentum indicators are supporting this upward movement. Based on Fibonacci extension measurements, the ideal target for the 3rd wave appears to be the 2.272 level. This level corresponds to approximately 2.272 times the length of the 1st wave. In particularly strong trends, it has often been observed that 3rd waves do not stop at the standard 1.618 level, but instead continue with higher extension ratios. Therefore, within the current structure, the potential rise to the 2.272 level is technically supported. If this level materializes, it would indicate an approximate 220% increase compared to the current price. These measurements are not only theoretical, but also ratios that have been tested and proven reliable in past market movements. For such a strong upward movement to occur, it must be supported not only by technical analysis, but also by fundamental analysis. At this point, news related to the project, technological developments, partnership announcements, or ecosystem growth will inevitably have an effect. However, by the nature of the 3rd wave, news generally becomes increasingly positive during this phase, further driving prices upward. If the price reaches the technically expected 2.272 level, we can say that a strong bullish formation will also have been developed from a charting perspective. Such upward movements often lead to increased investor confidence over time and enhance the project's value both technically and within its community. If this scenario plays out, it would not only offer short-term gains, but could also mark the beginning of a larger trend for long-term investors. Therefore, current positions may be evaluated from a broader perspective rather than limited to short-term trading strategies. Additionally, Fibonacci levels not only help investors determine price targets, but also play a critical role in identifying take-profit zones. If the price reaches the 2.272 level, a corrective 4th wave may begin from that point onward. However, expecting such a correction before the 3rd wave is completed would be premature. Therefore, while investors hold their positions during the 3rd wave, they may develop gradual take-profit strategies as the target approaches. This approach supports risk management and helps maximize returns from high-potential positions.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming.
Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.